Good morning, good afternoon and good evening, wherever you are connecting from around the world. And welcome to this session on financing water-related investment at the 7th OECD Forum on Green Finance and Investment. My name is Anthony Cox from the OECD Environment Directorate, and I will be moderating our session today. And we are very honoured to have with us a stellar field to tackle the pressing issue of water finance. The world has been thrown into disarray by the COVID-19 pandemic and the ensuing economic crisis. And that crisis has starkly demonstrated the importance of access to safe drinking water, sanitation and hygiene for human health. And in turn, it has become clear that it is inextricably linked to the ability of societies, communities and businesses to be able to generate jobs, income and growth as we seek to build back better. So a key question for us in today's discussion is how investments in water security can promote sustainable growth, enhance resilience, generate jobs and income, and play an important role in what we hope will be a green and resilient recovery from the COVID-19 crisis. Now, the economic case for investing in water security has never been clearer or stronger. Work from the OECD and other organisations has clearly demonstrated that the benefits from strategic investment in water security could exceed hundreds of billions of dollars a year. But moving from merely making the case, which is important and we must continue to do so, to implementing policies and actions to scale up financing, it's where the focus must now be. So we look forward to our panel addressing the opportunities, the key actions that need to be taken, how to deal with bottlenecks in the financing of water, and the next steps and priorities. Before we turn to our keynote address and our panel, I'd like to remind all participants who are watching the live webcast that they can ask questions to the panelists via the OECD Forum platform or via the OECD event application. Now, the team behind the scene will moderate the questions and we will feed them to the speakers during the discussion part of our session. So turning to our keynote speaker today, it's my great pleasure to introduce Dr. Abdulaziz Al-Shabani, who is the Deputy Minister for Water Affairs for the Kingdom of Saudi Arabia and the Chair of the G20 Dialogue on Water. 2020 was a groundbreaking year for water on the G20 agenda under the leadership of the Saudi presidency. The nature and scope of the water challenges faced by G20 countries pose a systemic risk to growth, productivity and sustainability, which made the water issue ripe for increased attention within the G20. Dr. Al-Shabani was a driving force, indeed the driving force behind the Saudi effort to put water squarely on the G20 agenda. And the OECD was very proud to support this effort over the past year. Dr. Al-Shabani, the floor is yours.
Okay, thank you very much, Anthony, Kathleen and OECD for organizing this very important forum. Before I start my talk, I just have to give credit to my colleagues. I'm not the driving force behind the work that we have done for the G20. I have an excellent team here at the Ministry and some of our consultants. So I'd like to thank you again for this forum. Good afternoon and good day to all of our audience. And thank you for selecting this very important topic, and wish you all the best for the remaining of the forum. I have selected the title for my talk to be Financing for Water, Gaps and the G20 Dialogue on Water. And as you know, ladies and gentlemen, this year our entire system have been put to the test. And amongst those put to the test is our water management system that are much in need for all during this pandemic. At the same time, Saudi Arabia and its presidency of the G20 convened the first dialogue on water that Anthony just mentioned. And it is a pleasure to be with you here today and share with you some of the thinking process that led to the work the G20 countries have been maturing this year. Back in 2019, in Osaka, Japan, and in receiving the G20 presidency, the Saudi Crown Prince reassured members that Saudi Arabian presidency shall focus, amongst others, on facing the funding challenges to achieve the sustainable development goals related to water. And this sparked the team here at the Ministry of Environment, Water and Agriculture to address global water issues related to challenges or global water related challenges, including funding in a global perspective, not only for the G20 countries, but for the entire world. And that is to first achieve the sustainable development goals, or SDG 6 in particular, by 2030. Second, to address and deal with the changing weather patterns or the impact of those, the growing population and aging infrastructure, and also the issue of water for food. To achieve Sustainability Development Goal 6 of safe water and sanitation for all, around 114 billion US dollars per year are needed, according to the World Bank. Much of the high percentage deficiency is in Africa, in both water and sanitation, with moderate deficiency in Asia, Eastern Europe, and Latin America. Overall, only 80 countries have achieved universal drinking water, and only 50 countries have achieved universal sanitation coverage. The resilience of our water management system to changing weather patterns observed across the world probably contributed to creating areas of severe droughts and others of excess water. These changing patterns are observed with trends in global climate patterns. Regardless of the reason behind it, the need for adaptation to these changes demands funding to save lives and infrastructure and to maintain food security, health, and hygiene. These changing patterns are happening at a global scale. The need for funding for water management system is not bound to financially less privileged countries, but the challenge of aging infrastructure and the need for rehabilitation is highest also in East Asia and the Pacific, followed by North America and Western Europe, where the needed financing is around 40 billion US dollars to the year 2030, and total globally to around 250 billion US dollars. The OECD and the World Water Council estimate that the financing needs for infrastructure could reach as high as 22.6 trillion US dollars by 2050. And if those needs are not met, this could translate into water insecurity for hundreds of millions worldwide. In this year's G20 Infratech agenda, water infrastructure was addressed by calling for the enhancement with new technology measures, which was endorsed by the G20 finance ministers and central bank governors meeting. The technology included that related to information with the aim of improving investment decision over the life cycle, enhancing value for the money, and promoting quality in investment of infrastructure. In water for food, no financial model is being implemented globally as to how much is charged for water used for food production, which comprises around 43% of irrigation water globally. This percentage rises to 60, 70, and 80%, such as the case in the US, Spain, and Saudi Arabia. respectively, and major portions of this is non-sustainable. The other factor is that most of the food crops are at risk of high water stress. To this end, and for being one of the areas where water stress is hard felt, the G20 presidency of Saudi Arabia has convened a series of meetings for water contact group and water deputies and officials to address water challenges in the resilience of water management. And I'm very proud to be part of this together with the team here at the ministry and also all of the people responsible for water in the G20 and the G20 countries and the invited countries and also invited international organizations. I would like to highlight that it is an ongoing process leading to the G20 summit in November. The Kingdom call is for the G20 to fill gaps in financing, included strengthening the enabling environment for investment in sustainable and water-related infrastructure and services, make the best use of existing sources of finance assets, minimize future investment needs by planning and setting priorities, and mobilizing additional sources of capital like the private sector. This year, and due to the pandemic challenge, the dialogue on water addressed the best practices in the G20 countries in facing the spread of COVID-19 by adequate water and sanitation. The dialogue demonstrated resilience in the water management practices in the presented aspects. And I can say that it was like a small conference of very technical and from the field presentations from all the countries. And this resulted in a compendium of the best practices published to members and invited countries. We expect that, we hope that this can be repeated. And speaking of additional sources from the private sector, I would like to jump to the experience of Saudi Arabia, where the government has made a commitment to the use of private finance-backed funding for most capital expenditure on water and wastewater infrastructure. The most notable development to take place so far has been the replacement of engineering, procurement, and construction, the EPC type contracts with build, operate, transfer, BOT type contracts for new desalination and wastewater treatment plants. This is done through Saudi Water Partnership Company and provide an enabling environment. A governance scheme is established through the National Water Strategy 2030 and the new Water Law or Water Act, and both the National Water Strategy 2030 and the Water Act are approved by the Council of Ministers and the Royal Court. The new Water Law, by the way, will be in effect in a couple of days. And in 2019 alone, we signed a contract of 7 billion Saudi riyal for water desalination and water treatment plants in the past 12 months or so. And the company has completed the requirements for the, the ministry, has completed the requirements for the National Privatization Center for around 147 wastewater treatment plants, studying the distribution network for these plants. This is the center that is responsible for transferring the projects from the public sector to the private sector and making sure they meet the criteria of privatization. All new desalination plants are built and operated by the private sector. The projects not only include greenfield projects, but also brownfield projects. And this is just a glimpse of the efforts the Kingdom is expending to create a resilient water management system. And this will, of course, no doubt will improve the quality of the service, the percentage of coverage, and also the job opportunities for many. And I trust that our esteemed panelists of this session will enlighten us further of the international up-to-date efforts, gaps, and actions. Again, I thank you very much, and I hope I have not run over the time allocated. And I look forward to hearing my colleague panelists. Thank you very much.
Anthony, you are muted.
Yes.
Anthony, we can't hear you anymore.
Can you hear me now?
Yes.
Sorry about that. Sorry. Dr. Al-Shabani, my apologies. Thank you so much for your insights into the G20 and Saudi Arabian efforts on water. It really does provide great background for our panelists, and we will circle back to you to get your reflections on what the panelists have had to say as we go through the session. So let me introduce now our panelists. We have, as I said at the outset, a stellar field who cover a number of aspects of the water finance ecosystem, the different parts of the network that is responsible for trying to drive greater investment and finance into water. I'll introduce them now, and then we'll tackle questions to each of the panelists in turn. So we're pleased to have Karine Masson, who is the head of Water Management Division with the European Investment Bank. We have Oswald Chanda, who is the Division Manager for Water Security and Sanitation with the African Development Bank Group. We have Preetha Hariram, who is the Senior Business Development Officer at FMO, which is the Dutch Entrepreneurial Development Bank, and Carlos Sanchez, who is a Senior Associate with White Helm Capital. I might, if I could, turn to Karine first. Now, the EIB has a strategic imperative to become a climate and environment bank. And, you know, we face a very challenging COVID pandemic. How do you see this renewed emphasis on climate, environment playing out in affecting the financing opportunities for water-related investments now and in the medium term? We face a very different situation now than we did, you know, just 9-10 months ago. How do you see it playing out for us? Karine.
Thank you very much, Anthony. Good afternoon. I hope you can hear me well. Great. Yeah, thank you very much. Yeah, so indeed, we in the middle of this pandemic, and the European Investment Bank has committed to a renewed ambition and on climate and environment, and the question is whether we expect this to have a positive impact on the financing of the water sector. And as we just heard from our keynote speaker, the investment needs are huge. So, sorry, the short answer would be yes, but obviously the reality is a bit more complex than that. So maybe I will just start by explaining the new ambition from the European Investment Bank. So basically, currently we dedicating 1/3 of our lending to climate action. And our new ambition is to increase this to 50% to climate action and environmental sustainability by the end of 2025. And in addition, by the end of this year, all our lending will be Paris aligned. So why is it good news for the water sector? Well, most of the projects that we're financing currently in the water sector would qualify under climate action or under environmental sustainability or both. If I take an example, we currently financing a wastewater project in Guayaquil, in Ecuador, Latin America. Construction of a new wastewater treatment plant will bring substantial contribution to climate by reducing GHG emissions, substantial contribution to environment by reducing pollution. So very positive impact from this renewed ambition. Why did I say that it's a bit more complex than that? Of course, we all committed to this green recovery. I'm working in the water sector, very looking forward to seeing more water projects that we could finance. But the green recovery is much wider than that. There are many other sectors looking for finance. So what is very important to us is that we can see very well prepared projects, resilient projects. Our renewed ambition on climate and environment will come with increased scrutiny on the project. Are they well prepared to tackle climate risk? Do we consider they are Paris aligned? How will they be aligned with the taxonomy? So this is very important that we see some projects, and of course we are very much looking forward to support the promoters when there's a need. So in a nutshell, yes, very positive, potential positive impact from this unfortunate crisis, from our renewed ambition, but we need to see well-prepared projects.
Thanks, Karine. Well, just to follow up quickly on that, you mentioned the competition for funds. You mentioned the need to have good project preparation. I'm aware that you have some new financial instruments, such as your EIB Sustainability Awareness Bond. How do you see this playing out in the new environment? How can it raise finance for water-related investments and making sure that these are resilient over time?
Yes, we created this new financial product 2 years ago now, the Sustainability Awareness Bonds, and we launched the first one in September 2018, actually. And the idea was to complement the CABs, so the Climate Awareness Bonds. So the CABs focus more on the climate-related projects, and the idea of the SAB was to build on this success and to expand the scope to environmental and social objectives. So again, very good for the water sector, which actually was the first sector under the SABs. And since then, we've expanded to health and education. So how does it work? Here, the keyword is substantial contribution. So the SAB proceeds are allocated to projects which bring a substantial contribution to environment or social objectives. So if we take the same example that I took earlier, this project in Guayaquil, substantial contribution to environment, substantial contribution to access to water and sanitation and to pollution control. The way it works, and I will explain a bit so that because I think it's quite important, is that thanks to our in-house technical expertise, we've defined criteria. So, of course, we're very afraid of greenwashing. So we've defined technical criteria which help us screen all the projects that we finance against the objectives that we've put under the SAB. So what is the value added? To come back to your question, I think what is very important is that it brings transparency, more transparency to the capital markets, because when we launch the SABs, we have to report on what we do, how we do it, and the impact of what we're doing. So it's more transparency that we bring, and we are audited. We have more than 10 years experience in the CAB. They have been audited all the time. This year was the first audit for the SAB. And this is a process from which we learn a lot, actually, and which will help us to improve. But these two parts are very important. The technical preparation, so this is well grounded, and the audit. So in a nutshell, I think these products are key because they shed the light on the sector. They shed the light on the good projects that we can finance and how they are important to respond to the investment needs that we just mentioned. And we're very happy actually to share our experience on this because there is this ongoing work on the taxonomy, which will set a standard for everyone. So we're very happy to be able to contribute to the platform and to explain what we see working, a bit less working.
Thank you very much, Karine. And you've given us a new acronym we have to work with now, SAB. Well, I'm glad we'll have to store that one away and use that acronym for the future. And you raised some very interesting points there about transparency and, of course, this magic ESG dimension, which was actually the subject of a lot of commentary in the OECD's Business and Finance Outlook last week, where there was some a number of strong discussions around the role of ESG going forward and how that can enhance green investments. I might now turn to Oswald Chander, who, as I mentioned before, is with the African Development Bank Group. And Oswald, it is great to have you here, and it would be.
Thank you.
I think it would be very good to hear from the African Development Bank perspective, the pressures that are being placed on many water and sanitation utilities are increasing at the exact moment during the crisis, the pandemic crisis, when their services are more vital than ever in limiting the spread of coronavirus. So how is the African Development Bank taking steps to shore up support for the service providers under the financial pressures that we're seeing due to the crisis?
Thank you very much. Indeed, you are very right that the advent of the COVID-19 has indeed mounted quite a lot of pressure on service providers. This particularly was more pronounced in that we did get quite a lot of political pronouncements in a number of countries that there should be no payment for water services, there should be no disconnections, and that just put a lot of pressure on the service providers because they needed the resources. But what we have done as the African Development Bank was to first issue a guidance note. We did issue a guidance note to the countries where we are working, where we looked at how to respond to the coronavirus in the water sector, in the water and sanitation sector. We looked at issues of emergency, that's making water available through water bowsers, improving sanitation, and so on and so forth. We looked at medium interventions, but we also looked at the recovery. That's the long-term actions that needed to be looked at. We addressed the technical as the financial aspects of this solution. Following up to that, we, in all the countries where we had water programs running, we did allow a certain percentage, depending on the magnitude of the program, a certain percentage of the resources to be used in supporting emergency activities, things like buying of disinfectants, buying of chemicals to ensure that water was adequately treated. But besides that, on a global scale, the bank did go out to mobilize resources and mobilize about 10 billion, which was targeted at the countries in helping them respond to the effects of the crisis. And these resources, most of it has been approved and given out to the countries. Now, this included the government subventions to the service providers, things like buying of chemicals, paying for electricity. We saw that there is quite a variety of interventions that the governments have put in place in many of the countries. Now, what helped us mostly for us from the 4.7 billion portfolio for water and sanitation that the bank is running on the continent, about 75% addresses WASH. So that made it a whole lot easier. So a number of interventions were already in place, such as hygiene, education, was already embedded. So that helped the countries just to heighten that component and increase a little bit of the resources to help in responding to the pandemic. But in addition to that, we also did introduce and launch a study where we wanted to better understand how are these service providers affected, in what ways, how can they be helped, what is going to be the best way of helping them fully recover. Because the impact of this crisis is not a 2-3 year issue. It's going to last for quite a number of years. So we launched that study so that we can have a better understanding of the issues, of the challenges, and what needs to be prioritized. Now, just one quick aspect. I want to mention that we consistently and 100%, all the interventions, all the financing that we are doing now in water and sanitation are being subjected to climate change screening. For resilience, we have an instrument, we have a tool that we screen all our projects before they're approved, and we have to show that rating and how the project responds to issues of climate change and how it's going to contribute to building the resilience and sustainability. So those are aspects that I think the bank has introduced. Besides the financing, we have done a lot of partnerships with the other development agencies, the EU. We are also very closely working now with the global environmental and climate change funds to ensure that we mobilize the additional resources, to increase and to improve the climate change resilience of our interventions, not just focusing on the infrastructure investments. Thank you.
Thank you, Oswald. I think that's a very interesting focus on the combination of the emergency response plus focusing on the longer term recovery. And it's very interesting, your point about how there was an opportunity to accelerate investment in a number of existing projects or areas to build on the solid base that was already there. Just as a quick follow-up question, the African Development has put in place quite recently an African Urban Sanitation Investment Fund. How is this aimed to mobilize capital for catalytic investments in innovative sanitation services?
Yeah, well, thank you very much. Yes, the bank, working with the Bill and Melinda Gates Foundation and indeed other partners, is currently in the process of establishing an Africa Urban Sanitation Initiative program or fund. As you have rightly said, that is targeting at improving urban sanitation. And now for urban sanitation, you see what has been happening in the past is the bias has been more towards seaward sanitation, centralized systems, which is very expensive. And it's the investments required. It will be very, very difficult for anyone, those that have not yet met in Africa, to meet even the SDG target. And so this fund is looking at first addressing the approach. We're looking at an all-inclusive sanitation initiative in terms of the approach, in terms of the technologies. We're trying to promote alternative sanitation solutions in the urban areas. but we also be very holistic, not leaving out where sewer sanitation is appropriate and the best solution that will be used. Where on-site sanitation and then looking at sludge treatment is the solution that is going to be looked at. Now, I think what is very interesting, as you have rightly said, is on the financing side, because we're looking at first promoting and supporting upstream developments, the designs, the studies, the planning that needs to go in, and then looking at promoting private sector participation, private sector financing, what the private sector can take up in terms of running or financing will, within this platform, within this OSIF framework, we're going to see that we secure that support. And the bottom line for this is to say that first, we have accelerated, sustainable, and resilient support to urban sanitation. So we're looking at mobilizing not only public financing, but private financing as well to go into improving sanitation. Just as I think the minister did indicate in the keynote address, that's the direction that we are going to.
Thank you very much, Oswald. That is very interesting, and I'm sure we'll come back to get some more reflections on the developments in Africa going in the rest of the session. I might now turn to Preetha Hariram, who, as I mentioned earlier, is the Senior Business Development Officer with FMO, the Dutch Entrepreneurial Development Bank. Preetha, there are constraints on public and development finance. So where do you see the most promising opportunities to crowd in the commercial capital required for water investments that are going to contribute to what we've all been aiming for, which is climate resilient economic growth?
Thank you, Anthony. I think you can hear me well. I think first of all, one needs to understand that this is a really interesting space for DFIs such as FMO and other types of development financial institutions that put forward commercial financing in this sector. But I think something that I'd like to clarify up front is when you're playing in this particular sector, one needs to remember that when you are bringing in commercial financing or commercial types of financing, the focus should not be on the commercial viability of the business case, but rather on a more accountable trend for both the financier and the borrower. So the focus should be more around the impact of financing rather than, what is the return of investment and how high is the rate of investment that you're going to return. And that's the role of a DFI in compared to a commercial financier in the market as well. So having said that, to that end, DFI such as FMO, what we are looking at is providing more early risk capital, if you like to call it patient capital, for businesses and social enterprises that are working for water service providers to help them come up with solutions to provide more efficient services, accelerate or increase the access to service as well. So we've taken, for example, we've also taken the current pandemic as an opportunity to really accelerate that type of businesses and financing in the market. What we are seeing, especially in the eastern parts of Africa, is we're noticing that the WSPs are seeking for this kind of a demand where there's a bit of a shift and a change from how they usually procure or also seek financing for investments to improve their efficiency, but more so in this particular case with COVID, increasing the access of water. So ensuring there is 24/7 water for people to have access so they can wash their hands, have it available. So in this particular space, we are crowding in some what we call early risk capital to trial and test some of these new innovative business case like leaseholding opportunities where we can also then accelerate access to local finance for either the water service provider or these businesses or social enterprises, and or us also step in for those financing. But one needs to understand here that this is not a very easy domain, because as a DFI or any financier, we always like the big ticket items, nothing less than 10 million, nothing less than 20 million. But this space is really, really small. We're lucky to see anything between the 1 to 2 million euros, for example. But I think it's an opportunity. Unfortunately, yes, we are caught up in this pandemic, but this pandemic has also brought in an opportunity where I think the sector has been hiding behind in terms of, okay, what is really the most impactful? I think the largest impact is actually the smaller ticket items rather than the large scale. Yes, the large scale is required, but this is a key prominent space, and we're seeing that DFIs like ourselves, alongside with the IFC, are playing in this realm with other players. Secondly, I think I do need to highlight the larger scale type of financing is still needed. I think, as Dr. Al-Shabani mentioned earlier, there is a shift in how countries are looking at crowding in private sector financing. So we're focusing mostly on the PPP structures. So here, FMO is also very much involved in that, where we actually are stepping in across the whole value chain of developing those projects and bringing it to the market, where we could also play as a co-investor and or open it up to other investments. So very much those BOT type of contracts that's happening in Saudi Arabia. But again, not every country can do this, because you do need some kind of a maturity for countries to have national frameworks in place to be able to attract this kind of financing, because the investors need to also have comfort in financing or investing in these countries. So we're seeing this more within the middle income or higher middle income countries, typically where FMO also plays. But I think as we are pushed to finance more in the low middle income countries, we're seeing this space not so easily to enter, but we're finding this a lot more easier to enter. For example, we are quite active in Latin America and in Southeast Asia, where these frameworks are quite advanced as well. And last but not least, another area of focus for us is actually investing in businesses who are wanting to take the step forward in water stewardship. So we are working very closely, for example, in the textile industry, mostly denim producers, who are wanting to test and trial technologies and techniques that can reduce the use of water by 65% and also accelerate towards zero discharge of hazardous chemicals into the water. So this is a very interesting space that we're working in. Again, very novel, innovative technology that's coming. But also when we step into the larger scale, the whole ESG agenda comes into play here, where we would not look at projects. We actually scrutinize projects under that ESG lens. So we then throw on the climate resilience adaptation value onto it, and how we can then stimulate more innovative and robust type of techniques and technologies in there. So for example, inclusive of nature-based solutions, where we've known to see it and quite prominently seen it to be quite highly climate resilient as well. Thank you.
Thanks, Preetha. And you've certainly run the gamut of some of the key issues facing DFIs. I think your focus on early risk capital, on patient capital, on there's an issue about small-scale projects versus the large-scale ones, and I guess that gets into questions about aggregation and informal, more formal structures around that. And fascinating to hear about the denim producers. I think that's links up a lot to the big push within the fashion industry to become more sustainable fashion is. So making those links is key. Just to follow up, talking about risk, a lot of the water projects that are quite essential tend to be high risk. So how do you see things like the new Dutch Fund for Climate and Development providing opportunities for DFIs to bring these kind of high-risk water projects to bankability?
Yeah, no, that's a really good one, Anthony, because typically DFIs, we've just been kind of sitting and working with sponsors. They basically bring projects that are already developed, which just takes only 4 or 5 months for us to do our due diligence and then finance going forward. But in this particular space, in this sector, we don't see those kind of bankable projects actually really coming to us. So with the Dutch Fund for Climate and Development, we have been able to unlock this early risk capital for early project development, something that DFIs usually do not step into. So here we work together with the project sponsor, but of course we're not doing this alone. We have come together in a consortia, which is also quite unique in this world. We have 2 NGOs, the World Wildlife Fund for Nature and SNB, plus, because these guys are the ones who are on the ground, so they really understand the demand that is required by the end user or the borrower at the end of the day. And also together with a very well reputable fund manager called Climate Fund Managers, who understand the appetite of investors, your hedge funds who would put their money into such funds. So we're trying to bring these 2 worlds together, but the only way we can take them to this journey is actually bring them right to the start of the birth of the project, in the sense at that feasibility stage, putting in that early risk capital, coming together as a consortia with the project sponsors to develop projects and to structure them at that point of time already that can whet the appetite of a financier like us, who will be stepping in with more financing for the implementation, plus what the funders who will be putting more money into the investment fund going forward as well. So it's quite a unique case. Not many DFIs play in this role, except for, of course, the IFC and a couple of others. But if you look at the European DFIs, FMO is perhaps one of the first stepping into this realm of project development and seeing it through. So basically, we're taking the time, that 2 to 3 year time, to bring it to financial close, but we are funding or we're financing that early risk as well. So a very unique structure that we're hoping would actually bring fruit to some really nice deals for all of us.
Great. Well, we look forward to hearing more about that. So I might turn to our last panelist now, Carlos Sanchez, who is the Senior Associate with Whitehelm Capital. And thanks very much for your patience, Carlos. We're very much looking forward to hearing what you have to say from the perspective of a private infrastructure investor, which is a unique one, and one which everyone is very keen to hear. How you see the opportunities for financing water-related investments, particularly in connection with the types of cross-sectoral infrastructure assets that we often see at the city level. How are developments, for example, how are recent developments in digitalization driving these kinds of opportunities?
Well, thank you very much. Good morning, afternoon, everybody. Thank you, Anthony and Kathleen, for having us here today. Before diving into your question, let me give you a little bit of background of who we are for the benefit of the audience. We are an infrastructure fund manager investing on behalf of pension funds across different sectors. We have a track record of 20 years in which we have invested around 7 billion euros. We have a very strong approach to ESG, which has become very, very hot in the last years in the finance world, but it's something that we have been doing from day one, because it's impossible to think of a 15-20 year investment that doesn't have a good scoring on ESG by itself. So it's something that we've been doing from the beginning, and we're still doing it. Our approach to water is through 2 different vehicles. One is the Whitehelm European Infrastructure Fund 2, which takes care of the traditional infrastructure. One of the sectors would be water, and the other one would be the Smart City Infrastructure Fund, which will have an approach of digital infrastructure. Having said that, coming back to your question, we see that water scarcity affects 40% of the people in the planet. And then even though water access and sanitation have improved in the last year since 1990, we see that that droughts and desertifications are worsening. From an institutional perspective point of view, for us, it's important to note that the respect of water as a commodity is very important, while giving access to the water at a price affordable to everybody. Which leads me to the idea that conservation, recycling, reusing are very important to be able to provide to deliver the water to everybody in a sustainable way. And today, technology can help us with this. As we all know, more than 50% of the population lives in urban areas, and everybody's talking about smart cities and digitalization, although not everybody understands the same thing of a smart city. The way we see it is that a smart city is a city that can provide services and run their systems in a more sustainable and efficient way, which will allow the city to be more resilient. A way to run the city in a more efficient way that we see is instead of running all of the different verticals that could be mobility, water, energy independently, is about getting all of the data from the different verticals and crossing it and start creating models and patterns that can extract value through savings and efficiencies. Let me say that we are not interested in the value of the data, because that's something that's not within our risk profile, which is low risk long term. But we're interested in making sure that we are collecting, transporting, and storing that data in a way that third parties, that could be public or private, can have access to that information and use it to improve any service and run it in a more efficient way. And we also believe that data ownership will stand with the city more likely. Some of the developments that will allow to deploy water investments in city environments would be smart meters, which will allow network managers to have access to live data, and this will help them on their identification of leaks, illicit connections, the detection of flaws, which is something that in the long term will help them on their daily maintenance plan and investment projects. We are also seeing projects that are linked to climate change, which are flood control systems that are targeting sewers, identifying nodes that may be at risk, and making the cleaning of the sewers more efficient, because you have a better understanding of how your network is. Then there are others, such as quality of water, detection of bacteria. We've seen projects in the Netherlands of cleaning of rivers and channels using bubbles, which is targeting mainly plastics retrieval before going into the sea, and without touching it too much. But there's also like a big potential in irrigation systems and agriculture.
Thanks so much, Carlos. You've raised a lot of issues. There's so much to dive into, and the focus on data is interesting. And I think one of the things that is clear in trying to bring different actors together in this kind of approaches is the financing approaches have to be designed to be able to share the benefits across public and private actors, across different industries, across different sectors who have different demands and needs for revenue streams. So what do you see as kind of the approach to delivering attractive risk-adjusted returns for investors, as well as balancing out the needs for these broader socioeconomic benefits that you talk about for the smart city going forward?
It's a good question. So in the past, we have seen private finance initiatives that have not worked very well. We identify the main problems linked to not sharing the benefits and not sharing the risks. So the way that we see future PPPs working properly is about making sure that all of the parties have the same goal and that their objective is aligned. Because otherwise, every argument is gonna be end up in a conflict. It's about creating situations where there's not a zero-sum equation in which in order for one to win, the other one has to lose. It's about creating those scenarios, those contracts where we're all aligned. And an example is the savings sharing. It's an approach, a mechanism that can be used not only in water systems, but also in lighting or energy, anything that has to do with energy efficiency. So definitely that's something that has to be there because it's motivating both the private side and the public side to run the system in a more efficient way, which will result in a better service for the communities. At the same time, one thing that we find very important is sharing the risk in an appropriate way. And this means leaving the private sector manage those risks that they are more used to manage, and therefore will be able to manage them better, and let the public administrations manage those risks that they are in a better place to manage. And here I'm talking about regulatory risk, operation risk, financing risks. So it's about the word partnerships and not just about like creating scenarios where there's a competition between public and private. It's about working together.
Thank you, Carlos. And you have, along with Preetha, raised this issue of risk and how we deal with risk. So that I think is a key factor going forward. And just before I turn to Dr. Al-Shobani, I can't help but notice, Carlos, you have a background there of the Sydney Opera House and the Sydney Harbour Bridge at Aston Australia. I'm very pleased to see that you're promoting two of our landmarks. Dr. Al-Shobani, there's been a lot of information, a lot of ideas, challenges, opportunities. As Preetha said, we should never let a crisis go to waste. So you've heard a lot of information being put on the table. Perhaps we can get you to reflect on what you've heard and how you see this playing into perhaps the agenda going forward for the G20 and beyond.
Okay, thank you very much. Very pleased of what I have heard, and of course, always welcome any source of financing for the water sector. By the way, I have never been into one room with so many financiers. Am I lucky today? Although it is only virtual. By the way, I will start from the last point. I think in our approach in the G20 discussion, we have covered most of these. I mean, in terms of the priorities, what should we focus on, and so on. Of course, starting with the investment and creative investments. This is one of the things that we talked about, is how to be creative or asking investors to be creative. Of course, the water sector demands a lot of investments, of course, and a lot of it goes into infrastructure, whether it is on the distribution, the monitoring, transmission or transportation of conveyance of the water, or on the production. Not all countries have natural sources of water in place around users. And I give an example. In Saudi Arabia, we do desalination, seawater desalination, and you have to transport it long distances. And most of the cost goes to transportation of the water, not just to the production of it. I think some of the points that our colleagues covered are actually all of them are very important. I will highlight some of them. I think of course, investment requires transparency and requires good regulation and governance in place, practical, fair, clear, and regulation that addresses all the interests of the people. We have done this here in Saudi Arabia. The new water law, by the way, is a very comprehensive. It addresses all the chain of the water supply and also the rights of the different parties in the water sector. And also transparency and requires good, reasonably accurate information. And again, I will use an example from Saudi Arabia where we are building a national database for water, and we'll make this national database available for investors so that investors build their plans on the right assumptions and the right data and risks. I don't know if the financiers can ask me for advice, but I will volunteer and give them advice. People always ask for or try to find the financial return of investments, financial return of projects. And I'm sure you know better than me that the economic return is more than just the monetary return of projects. And this is a very comprehensive, and there are ways to estimate these, whether they're economic or social returns. And I think it is good to include these in your calculations. Whether you link funding for in response to climate change or anything else, it is always welcome. And the water sector, as we said earlier, needs a lot of investments. Also, the solutions, you can try different solutions depending on where you are. For example, and this is mentioned by the panels, for example, nature-based solutions. Also, you can activate citizen science, engagement of local communities. You do not need to wait for the large-scale projects. You can induce and activate local or macroeconomy around water projects. Probably you can also bundle the projects or the activities. For example, something that is quick and has a fast or quick return, and something that is long-term project. I give you an example from the mining industry that I'm familiar also with, that, for example, investing in mineral resources and at the same time building a railroad. And these are, both of them have return, but one of them has quick return, and the other, of course, is a long-term, very long-term investment. Also, try to call for the social responsibility in institutions. It can be also, of course, all financial institutions always look for and expect returns, but I think it is Adam Smith, the father of modern economy, who said that if everybody runs or work for their interests, we will achieve the best results. I'm not sure about the translation, but I think it is something like this. So, of course, in the water sector, we wish we can raise the percentage of coverage, that we can have projects, and of course, financing institutions also run after their own investments. But again, another example where funding agencies request environmental impact assessment. This was not the case many years ago. And now, of course, I think all of funding agencies look or require environmental impact assessment. And this has good impact on good results, of course, on the natural resources, including water. I think digital or smart water, it is of course very important. But I once attended a conference and we were talking about smart metering and smart water and how to transport or make the sector more smart. And there were people who were saying that it is access to water, it is access to clean water. And so we need also to combine our objectives. And probably the last advice, if I can say, is we actually expect a lot from research and technological advances. And as financing institutions, you can also consider this in your plans, is to invest. These are not quick returns, by the way. They will not give you a return back in a year or two or whatever. But I think they are worth, and you can develop your own criteria for how to calculate or how to measure the performance indicators or the return. But we expect a lot from research and from technological advancements in making new, in development of new sources, in making water available where it is most needed. So these are my reaction and as the time allows.
Thank you very much, Dr. Thank you very much, Dr. Al-Shabani. And you've indeed thrown out a number of questions and challenges and advice to our panelists. And one in particular struck me that actually resonated with some of the things that the panelists have been saying, is that going beyond the economic returns to water-related investments, looking at the social dimension is key, because water is a public good in many regards. There are social benefits, but how one factors that into the financing decision is key, and a number of our panelists raised that. We might circle back to that because what I'd like to do now is actually take a couple of questions from the audience who have been listening in, and we've got a number of questions coming through. And the first one relates to project preparation, and it's a bit of a long question, but I'll throw it into the panel, and we can see who would like to pick it up. And the question goes like this: the lack of finance to the water and sanitation sector in the countries that most need it is known to be a result of, amongst other things, poor project preparation. And most development banks are not prepared to support project development. There are no incentives for this, since it is a difficult sector that always loses to other sectors when it comes to investments. So what type of incentives would finance institutions need to change this trend? So a tough question. Who would like to put their hand up? Who's going first? I see Carlos has switched his mic off. That means that you want to go first, do you, Carlos?
Yeah, I can give it a try. I have been working for a couple of years with the European Commission on Smart Cities Marketplace, because their goal there is putting together cities, finance, and projects to make things happen, to make projects happen. In this case, is smart cities, but I see the same problematic, which is that there is a weak link in the project development. There's more finance than good projects, which is something that I think that Karine Maison said before, and I do agree. And I think that one of the things that they are thinking of doing is supporting the developers to put together projects that investors are ready to invest in and that the public authorities needs. So it's about supporting those developers, but working together with the cities and with the financiers, because sometimes it happens that a developer has a very good idea and puts up a plan that it's not in line with the city's needs or with what the returns of an investor have. So I think that the support to those project developers working together with cities and or authorities and financiers from the beginning would help.
Thanks, Carlos. I'm struck by this, by your response there. In there you said there's more finance than there are projects available. Now, we were in a session yesterday with where the UN Ambassador for the Ocean, Peter Thompson, made an observation that he thinks development banks are hiding behind this. They're using this project preparation as an excuse. So why aren't development banks and DFIs investing in project preparation, or are they? And it's just not paying off. Preetha, Oswald, Karine, these are all questions right up your way. So Preetha, please jump in.
Yeah, Anthony, I'm just going to have to bust the myth a little bit over there. Prior to joining FMO, I was with the Asian Development Bank. Half the portfolio of the Asian Development Bank actually goes for project preparation, which is basically project development. But something that everyone needs to understand this is the point that Carlos made as well. It needs to stem from a demand. Yeah, so there needs to be a demand for this. And who actually accelerates that demand? It is that city. It is the end user. It is the borrower who steps forward and says, we have a need in this. Can you support us in developing it? And then you would have development financial institutions, such as the multilateral banks. I think Oswald would definitely be able to step in on this, and so would also Karine, because I do know that these banks do focus on project development. And as you heard when I earlier spoke, this is an area that FMO is also stepping into, which usually a development financial institution, in the sense I'm talking about commercial development financial institutions, do not typically do. So I do need to bust that myth a little bit. But what is critical here is that the demand and supply analysis needs to already be done and actually be driven by someone who needs this going forward. When they do come forward with those needs, then you would actually unlock these funds that we typically say we do have lots of funds for this, for us to step in to want to also develop it. But there needs to be a time frame, right? So here we're talking about deals, we're talking about projects. So technically, projects and deals take anywhere between 2 to 5 years to develop to bring to financial close. We're not talking master plans, we're not talking the bigger planning stuff. That sits in a totally different domain, and typically, I can speak from FMO, this is not an area that a financier like FMO would step into. That perhaps is other types of financiers. But where there is a project that can come out of it, or whether small or large, within a 2 to 5 year period, you would have these investors stepping in, because as I said, there are different funds that each of these banks hold. They're trust funds that multiple countries put money into. The example of the Dutch Fund for Climate and Development, which is 100% funded by the Dutch government, the Netherlands government, of 175 million euros to be spent over a 3 year period. So there are these key things, and that's what's also asking us to step out a bit more, to work together with these different parties, whether it's the project developer, and also the project developer is basically, at the end of the day, the project owner. It's not some individual consultancy or a technology company that has a great idea that just wants to push it into the market. Someone needs to want it as well. There needs to be a demand for this, and that needs to be really clearly put out there, because we see so many options coming to our table, and we have to quite nicely, with a smile, say no, and that's not liked either. So I think this is a good forum to also put that out there.
So if perhaps I can bring Oswald in here, and Karine as well, and Preetha, I might push back on your pushing back on the myth. and you mentioned that you're focused on the deal end of it. It takes 2 to 4 years to get the deal together. But you said you're not involved in the master planning, the kind of the strategic sequencing, the big picture plan, which seems critical to me to be able to help drive the demand. Are we in a bit of a chicken and egg situation here, perhaps, where, you know, who's going to drive that? But maybe I can bring Oswald and Karine in and link up to the work of the African Development Bank and EIB. Oswald. Please go ahead.
Yes.
Oh, Oswald, I
say
thought.
A few words.
Karine.
Okay,
I think we'll have Oswald first, and then Karine.
Karine, you can go. I'll pick it up.
Okay, Karine, if you put your camera on, that'd be great.
Thank you, Tony. Yeah.
Okay.
Yeah. You know, I mean, the challenge of lack of well-prepared projects, particularly on the continent of Africa, is very real. You know, we feel it as financiers for both public and private financing. You know, you would see a need, you see where the private sector is interested, you know, but you go in the country, there are no studies and there are no designs, there are no environmental and social impact studies for you to begin discussing, looking or reviewing that project. Now, these are very important because they affect the quality of implementation of the project, how long it takes to implement the project, but also right from the onset, the costing of the project. You know, if you don't have good studies, good designs, it's very difficult to cost a project because you need to understand the risks, you need to understand the designs and the technologies that are being proposed. Now, I think at the African Development Bank, we have got an instrument called the Africa Water Facility. This is primarily a project preparation facility. Of course, there are other aspects. For example, the development of the OSIF that I talked about is under the Africa Water Facility. Now, the Africa Water Facility is an instrument that looks at all aspects of water, energy, water for agriculture, wash, for the industry. They prepare in that. So far, they have been, the instrument has not been able to meet the needs on the continent. And so we are in the process where we are looking at the instrument and trying to reconfigure it so that it can deliver faster, we can have greater participation. In this case, we go out.
Oswald,
can you hear me?
Okay. Oh, we can now.
Okay. I keep getting these interruptions. I'm not too sure whether it's on my side or it's on which side. So I think the need for project preparation instruments and resources is very, very critical. And we at the African Development Bank are making every effort to see that we increase the capacity of the Africa Water Facility so that we can have a whole lot more projects prepared that could be financed. It affects us as well because our own instrument is not able to meet our demand. We would like to go finance a project that is ready, you know, we just put in the resources, but many times, sometimes we have to start looking at financing the studies, and that takes much, much longer to finance a project. So it's a real problem, and we need to focus on it and talk to the different partners so that resources can be made available for this instrument.
Thanks very much, Oswald, and very good points made. And I think it'd be nice to now bring in Karine. And thanks for your patience, Karine. Although your screen is frozen, can you still hear us? Karine? Okay, while we wait for Karine to magically reappear with the technology become unfrozen, I might turn to some more questions from the audience. And there was one in here about the role of insurance companies in financing types of flood risk mitigation projects. And this insurance is something that is going to be a critical part of how we set up financing for the other aspects of water security that go beyond WASH into flood risk. Is this a key part of the thinking of the FMO or the African Development Bank, and indeed the private investors? What kind of role does insurance play in the flood risk issue? And would anyone like to tackle that one up front?
Yes, I can come in because we've got some instruments, although it's restricted to the Sahel region at the moment. But as we see more and more floods and droughts, the need to extend that instrument to other parts of the continent is becoming critical. We have got an insurance instrument. We call it ADRIFI, Africa Disaster something instrument. I can't remember the acronym. I keep using ADRIFI, but it's an insurance initiative where we're working with the private company, to insure against disasters, mainly flooding and the damage that thereof, and it's worked quite very well, particularly in the agricultural areas, ensuring the crops that would be damaged out of the flooding, but also in terms of drought. So what the thinking is, having a lot more insurance companies interested, and I'm sure they are, we can expand this to the other parts of the continent. Currently, it only affects the Sahel region. This is the region, the belt just on the border of the Sahara Desert, the countries that are where the droughts as well as floods, sometimes when they come, they can be very, very destructive.
Okay.
So there is an appetite, and we believe that it's going to grow. Thank you.
Thank you, Oswald. Preetha, did you want to jump in on the insurance question?
Yeah, just a couple of notes on that, Anthony. I think what we're seeing at FMO is insurance companies. We're seeing them step in as co-investors, largely to funds where we are managing or our sister companies are managing to accelerate towards climate investments. We're seeing a very small appetite of insurance companies stepping into the lower income countries. So there needs to be a kind of a similar forum for insurance companies to also crowd in the local insurers to step in here. But within the European region, what we are seeing is, especially on flood mitigation, we're seeing a lot of insurance companies stepping in as co-investors, even in the early development of projects, and also investing for implementation. I mean, we're seeing that across both the Northern European and the Eastern European belts as well. And I think the EBRD has been quite successful in actually crowding in some of these insurance companies in some of these countries. But if we're talking about the Asia Pacific or the African region or the Latin American region, we're not seeing that many players. And I think that there is some room, perhaps even for the likes of the OECD, to crowd in these type of people to be, I think, involved in such forums like ours. And I think, but then the focus, of course, is very much on the energy transition, lesser on the water side. Yep. So on flood mitigation, I think there's still a lot of work that we can do to bring them in as well. So.
Well, I think that's a really good point you made there at the end there, Preetha, that one of the reasons they're into the climate, that insurance companies and insurance underwriting is very heavily into climate, is that the data is better. They got a longer history of developing the data and the models and the information to be able to accurately price the risk. This gets back to a point that Carlos was making and that Dr. Al-Shabani underscored, is the role of data here. Let me just check in with Karine before I jump to Carlos. Karine, have you managed to get back online?
Yeah, and I'm really sorry, Anthony. Indeed, I managed to get back online, but it seems that I have an issue with my camera, which probably made you see my nice screen and not my face anymore. Really sorry about this.
That's quite okay. Listen, we're just talking about insurance here, and I don't know if EIB has had much experience in engaging insurance companies in helping to become partners in financing water-related investments, particularly building on the climate-related investments.
Yeah, not really at this stage. Of course, we partner with some of them when we invest in equity funds and provide equity to some project, but not directly otherwise.
Okay, Carlos, you wanted to say a few words on this one?
Yes, just a couple of notes on that one. At the end of the day, it's a game of risk and return, and I guess that insurance companies probably are seeing how flood risks are going up, which means that they are probably they will be more at risk in the coming years as what they are today. So I guess that a way of de-risking their current position is investing in projects that lower that climate change risk, that could be flooding or could be strong storms or yeah. So I guess that we will see more when we start having more of those episodes in Europe, probably.
Thanks a lot, Carlos. And that's, I think it sounds like it's a very promising area. And as the insurance companies become more familiar with water-related investments, then we may see them playing a bigger role going forward. Panelists, we have 5 minutes left, and what I propose is that we take 1 minute each to give to provide the audience with the high-level challenges that you see confronting water-related financing, and in just that 1 minute, what are the 1 or 2 key things that you think governments are going to need to do to unlock and catalyse more investment in the water sector? And I might start with Dr. Al-Shabani, and then we'll go through one minute each. The key 1 or 2 things you think, Dr. Al-Shabani.
Yeah, okay. Since I'm on the government side, I think that the investors have the right, of course, to see clarity and data and see the water sector as attractive for investment. So it is on the governments to make the water sector attractive by, of course, making available the data where the projects are needed, whether large scale or small scale. Stability, of course, in the whole system, regulation, transparency, good governance, information, and good quality data. Sometimes data itself is not enough, but the right and accurate kind of information. So there is a responsibility on the governments to make the water sector attractive for investors in private sector on all scales. And I must say that in Saudi Arabia we have done a lot, and we still want to do more on making this sector attractive. And there are evidences that companies are, together with financiers, are actually investing, and a lot of projects are going around and under construction from the private sector. Thank you.
Thank you very much, Dr. Al-Shabani. I might now turn to Carlos. You have your 1 minute.
On my 1 minute, I will probably say that it's important for I think it's important for the authorities to address water investments in the more efficient way, and in order to use public money in the more efficient way. And I think that today there are a couple of tools that they can use. One is digitalization in a correct way, crossing it with other sources of information, and using private money wherever there is a business case that can stand it. And that will allow authorities to use public money for other projects that may have a big impact on society, but don't have those cash flows behind.
Thank you, Carlos. Great points. Oswald, if I can turn to you.
Thank you very much. My 1 minute is basically to appeal to governments to take on a holistic approach in their planning for investments and expansion, and that they need to capitalize on strong partnerships, leveraging knowledge, technologies, and financing to address their needs. Very, very importantly, they need to create the policy environment for the different partners, civil society, private sector, to be able to operate and bring their expertise and resources. Thank you.
Thank you, Oswald. It seems like the government is being tasked with a lot from all our speakers. Karine, your turn.
Yes, thank you, Anthony. Yeah, as most of my colleagues have said here, I think there's a clear need for strategy, for priorities from our borrowers, from our promoters. I would also like to insist on climate change and resist and adaptation to climate change. I think this is very important. I mean, we've talked about insurance. We talked about the risk from flooding. This is very important from the beginning to design the project well. And on project preparation, because I missed that, it's the moment when I was disconnected. Indeed, we have some tools to support. We've just launched the City Climate Finance Gap Fund, where the EIB is one of the implementing agencies, the World Bank being the other ones, where the idea is exactly to provide support to cities who would need the financing to prepare projects. So I'm ready to help on that.
Thank you, Karine, and I'm very glad that you managed to get your points in on the project preparation, which you unfortunately missed out on before. Preetha, we might finish up with you, with your 1 minute takeaways on the priorities and.
Yeah, thank you, Anthony. So from the government's end, or from the national or subnational level, what we would really like to see is a push for more accountability from their side, in the sense that, if you remember what I mentioned earlier, is if there is more accountability, there is more ability for us to crowd in some of that private sector finance. So what we would like to see is the encouragement of, whether it's water service providers or these implementing agencies or these borrowers, to reduce their dependency on cheaper finance, especially for projects where the business case is solid, where you can see a return of investments over a period of time, to allow for that private sector to come in, whether it's with blended finance or with other types of finance coming in. From a bit more inward, from the financiers' end, what really needs to happen is financiers should also increase their appetite to early risk capital. I think that without that, we're going to struggle a lot. And also, I think, since I have other fellow financiers, is to also look at those smaller ticket items which have been shown to have the highest impact, especially in those lower income countries where the need is the highest, and where poverty alleviation is our aim and where we should be working towards. So a bit of an appeal to other financiers to look into that space, because if the more of us do it, then there is more competition and ability to drive accountability on all sides. Thank you.
Thank you very much, Preetha. And colleagues, we've come to the end of our time, and it says in the run sheet that I am supposed to now provide a wrap-up, but I think I just couldn't do justice to the rich and interesting and deep discussion that we've had this afternoon. So I won't even try to do that. It should suffice for me to thank you all for joining the OECD Green Finance and Investment Forum this afternoon. I'd like to thank Dr. Al-Shabani, Carlos Sanchez, Preetha Haruram, Oswald Chanda and Karine Mearson for taking the time to share their expertise with us. I hope that the next time we meet, it will be in person rather than virtually. With that, I'll close the session and wish you all the very best. Personally and to our audience, thank you for joining, and we look forward to seeing you next time at an OECD water financing event, whether it is virtually here at the in the OECD Forum, or we do have some other forums going on. We have a roundtable on financing water, financing water that meets regularly, brings together institutional investors, regulators, and policymakers and businesses to focus on these issues that we've been discussing this afternoon. Our next thematic meeting is focused on financing agricultural water, and we can co-convene that with the FAO in November. And then we have a regional meeting focused on financing water in Europe, which is co-convened with the EIB in December. You can find details about that, about those events and others on the OECD Water website. So, wish you all the very best. A good evening, good morning, good afternoon, wherever you are. And thank you very much. Bye-bye.
Thank you very much for the invitation.
Bye-bye.
Bye.
Thank you. Bye.